The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White. And as we start off this day, we have a little bit of a bounce out here today, up 9 points on the S&P cash. We got up as high as 1840. I think we're probably going to slide down a little bit into the close, and I'm looking for an expiration tomorrow somewhere closer to, I don't know, about 1820 on the S&P cash. But anywhere in here is probably going to be fine. It's not going to make a big difference to the market makers, but I think we're probably going to see what we saw last week, which was a little bias to the downside after everything is worn out. I think we were printing somewhere around 1843 during last month's Friday expiration, and we saw it pretty much right off. Right off into the sunset. So it is pretty much what we thought. Last week, somebody called me up and said, which way is Apple going? Maybe they emailed me, and I said, well, probably better to go on a fishing trip. I don't think you're going to see any huge moves out of that and a few other stocks this week. I think we've got a good opportunity, and I am fully short the market, but I don't think this is going to be an easy one. Anyway, not a lot of volume, 2.1 billion shares. It is fairly quiet. I dislike the fact that even some of my own TFNN brethren are calling a market top here. I'd like to be the only one. And maybe just a few people too many, maybe just a little short. Maybe it's going to take a little while for this to actually catch hold. Normally, it's when everybody quits shorting, it's when the music stops and everything falls out of place. Anyway, if you are watching me on TFNN, you may be noticing something new this week, and that is my bright and smiling face from the trading bunker, some 10 stories below Tampa's surface in an old abandoned missile silo where I ply my wares each day in trading the stock markets. Of course, there is no 10 stories down. There isn't even a basement in Tampa. Did you buy that for a minute? Anyway, just a thought. I am in my own White House, though. And since I live here and my name is White, I'm calling it the White House. The seat of power, at least in my own mind. But like I said, seeing a bounce up today, this to me just looks a little bit like the last kind of gas, and I expect that probably what we're going to see is options roll over. That's going to be Monday and Tuesday next week. Look for a little heightened volatility on those 2 days, and then I think we're going to see the true character of the markets really start in earnest after those dates. And like I said yesterday, and I said in my newsletter today, I suspect that since we saw a sharp and violent move down in January, that this next move down, the next leg in the movement down, would probably be a whole lot less violent, but a whole lot more trendy and quiet. And I think it'd probably sneak up on a lot of the longs that they'll go, well, you know, it's just down 5 points today. It's just down 3 points down today. It's just down 7 points down today. And by the time they know it, they're going to be the proverbial frog in the water that just started to boil. But because it was so slowly, they didn't notice it. But at least everything I'm looking at right now suggests that we've got probably a little bit of time before we see this market move significantly down, and I think that's probably going to start next Wednesday. But there is significant weakness in this market, and just like a house that's about ready to fall because it was built on sand, You don't want to be jumping up and down too hard on it. We could see any kind of news maybe come out of, I want to say the Ukraine, but I see where they are very mad at us these days for calling it the Ukraine. It's just Ukraine, just like Europe. It's not the Europe or the Ukraine. It's just Ukraine. Anyway, we always like to start off this day with a little bit of history. 1961, the New York Stock Exchange lists 5 stocks all in one day. All are railroad or sugar companies based in Cuba, and their assets have been expropriated by the new government of Fidel Castro. Oh, what a shock. Communists taking over everything and then turning their wonderful country into a sewer. And what can you say? Still loving those 1957 Chevys and whatever else is left down there as they go to prove the point that every time communism and socialism has been tested, it has failed. When we look at Europe, not a lot of movement over there, mostly just minorly down. The real one that always matters, of course, is Germany's DAX. That is the dog. Everything else is the tail. It was off 0.4 overnight, or actually today. More interesting to me is Japan's Nikkei fell 2.2%, slipping back below its 200-day moving average as sellers took charge in response to a disappointing trade day. Hong Kong Hang Seng lost 1.2%, falling for the first time in 5 sessions. And China's Shanghai Composite shed 0.2, not giving up, kind of rolling overhead a little bit. I think it was up 0.5% earlier in the day. In Hong Kong, we saw Lenovo actually sink at 4.5%. We've got an early phone call here. We're going to go right to Marie in Pennsylvania. How you doing, Marie?
Hi, fine. We're getting rain for a change.
In Pennsylvania, okay.
Yeah, what a change. I wanted to look at TLT.
Okay, what are you thinking about TLT?
Well, I was wondering if it retests the date on the 12th, that it might be a buy.
You know, I'm not probably the biggest bond guy out here, but I would say that you're looking for a test of the 12th. I think you get it. Certainly very light volume today. I don't think this is as clear a signal as I would like to have. I think probably the most important thing that I'm looking at right now is the EUO. And I think that's probably going to be a bigger indicator of what's happened. Looks like we've popped back in, at least for the dollar-euro, back into this trading range. And I think all these things, gold, silver, just about everything is probably all predicated on the exchange rate and on the dollar right now. In fact, do I have a I thought I had this. Yeah. I mean, we're off this $80 level on the dollar index. And I think when we go back and look at the TLT and everything, I think everything's just really keying off those levels right now. But, what are you thinking about buying it there?
I was.
I think you're fine. You got light volume down here. You've got a fairly indicative, what was the low today? 105.69. So you got 7 cents. Probably gets tested tomorrow. If you come in there with less than 7 million shares, you go below that 105.62, closes back above, and the volume's light. I think I could like it to 109.34. I think that this could be a lot of times you get these ABCs that kind of go sideways for a little while. Mm-hmm. And I mean, you've got a nice setup here. Let's see if we can do that. The expansions. And what would that be? 101. Okay. So let's see what we have right now. If that's the A, and February 3rd is the B out here. Let's get that as B. And C is somewhere in here. So let's look at that as the C. Okay, so you've done a 45% retrace. Maybe we go in and pierce that a little bit and we get a 50% retrace by tomorrow. That would probably set you up. And I think you're probably I think this thing could get up and test that candle back into the June 6th area. So I think you've had everything you wanted in this. I think it's a great setup. The buy that you really needed to buy was back on the 6th of January, where you had two lows out here, one at 13 million shares and one at 12 million shares. Came into it on December 31st with 8.9 million shares. Once you had it closed back inside that trading range, that would have been the real long-term buy out there. This one's probably, it could be okay. But I would hope that maybe you get 105 out of this maybe tomorrow, and the volume just really shrinks up. And then I'd probably buy it there and put my stop down probably, 104 and a quarter, something like that.
Yeah, I was hoping for a little closer to 105. Could make it worthwhile to
yeah, I think you could get it tomorrow. I think intraday, and then it goes back up against above this 105.62. So you probably have a little risk in intraday if it goes down to 105. But I could see that, and that may set up the next real move out here. But I have a feeling that almost all these things, gold, silver. In fact, there was one I wanted to look at from my Gartley list last night. It was SIL. I haven't had a chance to look at yet. Hang on just a second. Let me clean all this stuff up. That was a Gartley. So we're seeing some Gartley patterns out here. And I'm starting to see some changes out here in things like silver ETF SIL. Looks like a pretty nice Gartley, and I think it's confirmed out to the side. So we're probably getting ready for these pullbacks in gold to some extent. And that probably also indicates that we're going to have a strengthening dollar, and I think you're going to see the TLT go up with it.
Is there a 10-year exchange traded note, on the...
I don't believe that there is.
I didn't think there was. I couldn't find one. I was just curious. Maybe I'd missed something.
There may be one, but, to tell you the truth, I don't spend a lot of time in bonds.
Right.
I spend most of my time in equities, in futures for the indexes, and tech stocks. So I probably wouldn't be the best guy to check out. Oh, someone says that there is one. TLH.
TLH.
So, TLH. Yeah. Oh, it had a nice Gartley out here. That's nice. But pretty light volume out here. Not a lot, but maybe another way to play it. 10, 20-year Treasury bond fund, so it's not a straight 10-year.
Mm-hmm.
But, I think the 10-year yield probably headed back up to 3%, but that's just a guess. Like I said, I don't spend the most time around those kind of things. More options on equities, more movement in equities. But I think I have an edge there. You might call Tom tonight and see what he has to say.
Okay, thank you so much.
You bet. Thank you all, and we'll be back in a minute. You can give me a call at 877-927-6648, and we'll look at that. But a lot of stuff moving out here. We'll be checking in through the end of the show on volume.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, I've got a lot of stuff going on out here, but we can always appreciate your phone call, and that's at 877-927-6648. You can also give me an email at path@tfnn.com and give me a stock in the den to look at also, but we'll be going along here fairly quick. Did I finish my news, my snooze? Maybe I did, maybe I didn't. I don't think I did. Did we, did Asia, oh, no, we didn't. Let's get back to this. I think, how do I get back to that now? Oh, it's that one right there. Anyway, we did China. I want to give kudos last night to Tom O'Brien, back from his show in New York, but commenting about some of the fast moves going on in the gold community, and them all making their way to try to loan as much money or get as much money as they can, either through secondaries or loans. We see that again today in Newmont Mining obtains term loan commitments of $575 million to improve financial flexibility, meaning not go broke. But I suspect that he is right, and we're going to see a flood of people looking for cash in what should be a company that is absolutely loaded with cash after watching gold go from $300 to $1,900. How come these companies don't have any money? Probably because there are companies in the world, the worst managed of all. Tesla beat last night, just on the amount of cars really that they shipped. Of course, if you look at their non-GAAP revenues, they are growing. It will still take them 11 years to grow in to the price that they are at right now at this current growth rate. So I could say you would. In fact, I'll say it is a bubble, and eventually it's going to get back to whatever the growth rate that would be correct. Their technology is interesting. It is most likely fairly duplicatable, and I have a feeling if there is a good market in that they'll be eventually quashed. Their stock price probably at least 10 times lower, or 1/10 of what it is now, and they'll be snapped up eventually by some other company. Normally when you get some kind of guy that is portrayed in the investment community as a CEO, like a Tony Stark, his star burns twice as bright, but only half as long. But we'll look at that, other things. Question in the den about price lines, so we'll get to that. PCLN. And what do we have going here? So, okay, price line. Got earnings tonight. The energy up, been good on this last run. They've been able to squeeze a lot of shorts. A little bit of hanging out here. Let's see what the headlines are saying, if there's anything else. This is kind of the same that way that Tesla did. They sold off before earnings. Everybody's making sure that they're not out in front of something like this. Anyway, I think probably fairly decent indication that some of these stocks, at least for a while, have topped out. Google, another one. When we look at it, these things have done nothing but go up, and there's always a retracement. This one has a huge gap down below. Let's turn that on so you can see. And the question is whether or not that gap gets filled sooner rather than later. I would suspect if we do have market failure here, that this thing is headed back to probably about the 950 level. And, maybe $1,200 up here. Getting kind of vapory and light in a lot of these super big stocks. Of course, this stock is going to split, and that's been something that's been able to run shorts for a little while out of this particular market. Let's see what else we have. To check in my mail, see if we have anything else, and I'll do that. How does GDXND GAZ look to you? GDX. Yeah, I'm going to talk about Facebook here, I think, after the break. So we'll get to that. We'll look at GDXND GAZ, and I think we're probably in there. I'm ready for a pullback. How about you? Anyway, we'll be back in a minute. Give me a call, 877-927-6648, and email me at path@tfnn.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're going to get going here, but got a couple of emails, I think. Let's go check those out and see what we have here. Yeah, I do. Okay. CF is evaluate CF as a blow-off top. So let's take a look at that real quick. And this is Wayne. Didn't say where Wayne is from. But well, you certainly, no, I wouldn't call it a blow-off top here. You certainly needed 4 million shares to stay above this 239.40 from the December 5th high. And as long as you're back in this thing is probably just banging away at these highs. You know, I can see what you're looking at. I would have liked to seen this thing start to close down today and start to sell off, and that you're up a little bit higher. This looks to me more like options market gas. I'd like to see this thing Monday or Tuesday do something. And that's the problem with reading in a lot of stuff into the last couple of days of option expiration. There can be a lot of things happening in here that are hedges and not real movement in the stock. They're meant to be transitory, and they come back to bite you. So I don't spend a lot of time in the last couple of days of expiration or the day after expiration into normally about 2 o'clock on Tuesday afternoon, because you're always rolling those options on and off, and there is a great deal of volatility put into the market with all kinds of bogus upgrades and downgrades. I mean, we've seen those today. We're going to get to Apple in a minute. But I would just hazard anybody to put too much weight into everything that happens in these last couple of days, and first couple of days of rollover. And it is not uncommon to see a lot of movement in these markets that doesn't hold up the scrutiny days later. And, of course, it's all about getting into markets that need to be hedged, and you get a lot of violent ones. I'm no currency expert, but UAP likes for the downside. Can dollar get any weak? I like that. I mean, I looked at several things, and I got a question in the den. Do you think the dollar can get any weaker? And I tell you what, you are at the level when I look at that EUO and some of the other stuff out here. I think that 80 looks like an awful, fairly well-defended area, either from the other countries or us. Someone's making sure that 80 sticks out there, at least on the dollar index. And I think when we look at things like the EUO, where that $17 level looks awful good, and we're moving back up on it, I think you got your back to the wall. I would be long the dollar here, short a close below 80 on the dollar index, or below probably 1690 on the EUO. I think those are probably your best examples right now of what we can look at. I had a question in the den about something from Andy, and he wanted to look at something. Let's get back up here. Where's Andy's comments? How does GDX? Okay, so let's get to GDX. DX. And, of course, these blew through confluence levels. That would suggest that confluence levels will be the support range on this, and that should be around $24.35, if I'm not mistaken, on GDX. Let's do retracements here. And, yeah, there it is. $24.48 to $24.36 on GDX. And if you get anything lower than that, then that implies that we could go back down to the low. But if you were looking at places to come back and buy the GDX, you'd look at that confluence level at 24.36, 24.48, and you're probably not get all that much of a retracement. If you do, you may not want to own it that much longer. So, yeah, could it go back and fill this gap? You got a high volume gap out here, but it's almost all at that same price, 24.22. And that's a 382 retracement of that move. So I would say you've got too many things lining up right around that 24.36, 24.48, down to 24.22. So anything probably below $24 is problematic in the GDX. Let's look at the GDXJ. This thing did a little bit better, probably because a lot of people were short these stocks. So maybe I can find something out here. Okay, and see, yeah. Same thing. You got a gap that runs right back out here at the 382 on gold, and this one's coming back to it real quick. 38 to 57 on the GDXJs. So you also have a confluence level almost at the same line, not as good as the GDX, but that's where I'd be looking at it. This thing doesn't have a lot of room to pull back. You got almost all of it today, I think. Maybe he comes back into light volume, but 38.57 is the line you probably wouldn't want this thing to go back below. If it does, then it probably goes into some consolidation. If you just get this light 382 retracement, that would set up possibly your next ABC run. And a lot of times it takes longer than this to get started, but you should see a fairly decent supply of buyers back here at that 38.52 when the GDXJ gets there. See if we have any else questions. Oh, I had a question on Facebook, and that was, of course, their acquisition of WhatsApp, and that's WHATSAPP. These guys put together a kind of a backbone and their claim to fame pretty much is being able to text anybody in a foreign country, especially in Asian countries. And if you're in China or a lot of those countries, texting somebody outside your country can cost you a lot of money. And so this app kind of acts like a Twitter, Facebook kind of thing already, in the fact that you can text somebody. It takes it out of the text realm, though, puts it into the internet, and texts somebody on the other one. So you could almost think of it as a Skype or a what do they keep advertising on at Walmart? Jack something. I forget the name of it now. Rapid Jack or whatever it is. But a lot of these things that were internet, long distance, very low cost alternatives to it, they provide the backbone, and you can text somebody in one country and not have to pay those fees of going from country to country. And they can be fairly large, 50 cents to $1 in some countries, from texting from one country to another. And if you're in business and you need to know where your aluminum's coming from or something else, you don't want to be running up $50, $100 a day text messaging people in foreign countries. So what they've done is really put that backbone together to allow cost-free. Now, the question is whether or not with Facebook they start shoving ads in there, whether or not someone wants to continue to do that. Is it worth $16 billion, $18 billion? Boy, it'd be hard for me. The question I have is whether or not this is going to be the eBay PayPal thing, where PayPal actually ended up being worth more than eBay. And because I think that basically what Facebook is looking for is some growth in somewhere other area as they find out that maybe they went maybe public at the very high end of the Furor about Facebook. So the market's trying to push this up to today, but of course I have a feeling that there's a reason. Now, when we look at Google was willing to pay for them a whole lot less, and we have that today. So I mean, this thing was off a little bit farther off. But we've got a market that seems to be rather mad these days for higher prices on some of these most speculative of stocks. So we'll keep an eye on it. Printing 1840 out here on the S&P cash, 2.3 billion shares as we have about 15 days. So we are back up here once again with an incredibly lighter volume, and we'll see how the rest of this market plays out. But so far, not much making me think that we've got any kind of energy to break out here to the higher. We had a question. What is that? What's that? Okay. Plain old checking in the den here. Basement, a totally different company. Nothing beats POTS. I don't know why someone wants to do that. Even AT&T is getting out of the POTS business. That's plain old telephone service for those people. Yes, pot is good. Landlines, laughing out loud. Okay. Nothing in there. And let's see if we have anything else in email. I don't see anything right now. We've got about 5 minutes, so let's go to some of these other stocks that I've been looking for in these. Let's go real quick. Been watching Adobe on whether or not this thing is ready to crest. A lot of these stocks are. This is a definition of a parabolic move. You've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days above the 3x3 displaced moving average. If we go and chase that to just a 9-day moving average, you'll see pretty much the exact same thing. You want to be watching these for a sign. I have a feeling that when these start breaking into these 9-day moving averages next week is where we're going to start seeing a lot of these bigger high floaters move back down. So keep an eye on those. What else did I want to look at here? AUY. So hang on just a second here. And we'll get this. There we go. Like I said, a lot of these stocks over either the 3x3 or 9-day moving average. We're starting to see some of the stocks like Yamana Gold, AUY, getting closer to these levels. And they've had 1, 2, 3, 4, 5, 6, 7, 8, 9 days out here over that average. So probably getting ready for the last of that. Caterpillar, I wanted to take a quick look at it today. And we'll see. Yeah, it is, what do we got here? The 20th. Especially Caterpillar out here, this has been a horrible run back up to the top. Pretty much a short squeeze started from the earnings back on the 27th. But certainly not a lot of people diving in here the last few days to buy it. And with 4.5 million shares today, and you got an 8.1 million share low out here on January 24th that needs to be tested. So that may be a good one to be short when this thing does crest out here. See, I had some other stocks of interest that I had written down. DSL, DSX, Duke. Let's see if there's anything else out in here. There's a few of them out here. Hang on just a second. Gold. Take a look at that. Of course, this one's probably one you really want to be watching out for if you're long on this one, GOLD. And this is the same thing. You want to be looking at the next time this thing comes back under either the 9-day simple moving average or the 3x3 displaced moving average, and watch out for that thing. You're probably going to get that short break. Gold could probably easily make it back down to this gap at 70. My guess is it's going to be sharp and quick in the gold market and scare a lot of people out, and we'll be watching that. But a lot of these have gone pretty much ballistic, and we'll be watching these on the pullback where these things probably should have come back. Probably, like I said, probably going to see this gold pullback in earnest start, I would suspect, later on Monday or Tuesday. And what else do we have out here? ISRG. One ring 80. Okay. Okay, what else do we have? CG coming in for gold now. Yeah, I think you probably have a little time. I see a couple of people buying gold out there. I think you probably have a day or two more before this thing rolls over, and I think it partly option dollar going to be driven. Now, if you want to see a stock that is set up, I know we had some people calling about shorting, and this is, if you're going to pull the trigger ever on ISRG, I think that they're better fish in the pond, so I'm going to throw this one back. But if you really wanted to go after a single stock out here that is short, this is the pattern that you want to be looking for. And this is known as a double repo pattern. We can do it with the traditional 9-day moving average also. But very, very close. We'll talk about this when we come back. But a close back below this 9-day or 3-day moving average, whichever one you want to pull the trigger on, would be extremely interesting. And we'll talk about this when we come back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And as we come back, we were talking about intuitive surgical here, but just about everything you like to see, and is exactly what I like to see it, as I see it, is this nice big run up. And that run started from 351.14 on December 17th up to 447.50 on January 31st. You get the pullback, a pretty nice little pullback out here. And then you get what you could consider an ABC up. The problem is that volume has never come back in. We get back up to the old tops, and you could either, even if you looked at the most conservative view or most bullish view, the high on January 21st had 780,000 shares. I'm actually looking at the volume on the 14th that had almost 2 million shares that day. And so when you get into it, 445,000 4 days ago, 574,000. You get a very light volume, 317,000, 246,000. And 185,000 today. Just not a whole lot. But the pattern that you really liked, I like trading out here for these high ballistic stocks, is called a double repo. One of our guests on TFNN probably 10 years ago, I haven't heard him probably in 10 years. He ended up moving all his offices and businesses to Asia and Singapore. But what we have here is just a huge move up that's ballistically. You want to see this thing move up and pretty much hold the 9-day moving average for 10 or 15 days. You want to have it close below for 3 to 5, something like that, then move back up. And when it closes below that price again, that is your trigger. Now, his things had nothing to do with volume. So kind of like Tom O'Brien putting together volume patterns with the Gartley patterns, I put together volume patterns with this double repo pattern. And this is exactly what I want to see. I don't want to see a huge ton of volume come back in, and you don't. And you see the last 3 days kind of a ski slope down of a volume as we go back into these highs. Just going to check and see. Let's see what else we have here. Andy was talking about DGAZ, I think. DGAZ. And what do we have on that? Oh, DG, if I can spell correctly. DGAZ. We'll bring that up here now. And, yeah, you got a nice little low out here. I tell you what, you don't like the volume picking up yesterday at these lows. Let's make sure that this is the right one. I think the title might be wrong. Investment seeks to replicate net expenses 3 times the opposite inverse of the natural gas index. Yeah, but DNI Pro Gas. Probably the data company could have come up with a better name for this, inverse natural gas. I'll probably call them up and ask them to change that. But anyway, you've got higher volume out here yesterday, which is what you don't want to see. So you're going to need a bounce. You're going to need probably some kind of test out here at the lows once again before this thing comes in. So I would be agnostic at these lows at the moment. But I have a feeling we're probably going to see this market move and change and give a confirmation for everything that we've been looking for, probably, I'm going to say late Monday, Tuesday, maybe as late as Wednesday. I think we're going to kind of bounce around from there on. Anyway, Andy is going to be starting here just in a minute. Volume still light, 2.3 billion shares, 2.4 billion shares at 1840 as they kind of hold this market up. I suspect we're probably going to see the same thing as we saw last expiration cycle, and that is a slow melt-off into the weekend. We'll see that tomorrow. Anyway, so...
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.